Good evening, everybody. Hope everybody's having a nice fall evening. Uh, Tonight we got the great pleasure of having Steve Primo on with us, and always enjoy his information. He usually has some very good quality investment perspectives. So, with that, Steve, welcome to the Candlestick Forum. We're anxious to see your information tonight.
Thank you very much, Steve. Thanks, everyone, for attending tonight. And in tonight's educational presentation, I want to talk to you about missing the big trending moves, because this is probably one of the most common questions I get from my students or prospective students. They say to myself, they say, Steve, how come I always miss these big moves? Or, I'm always a day late or a dollar short, and everyone else seems to be catching them, but I missed them, or I didn't, know exactly when they were going to be taken off. For example, if we look at this chart here, this is an older chart, I believe. We go forward, yes, in Tesla. Okay, now let's say you were interested in purchasing this and you were thinking that it was going to go up. Unfortunately, it did go up. In fact, you were thinking about maybe buying it here, and then it took off on you. And then at this time, you say to yourself, wow, I think I missed this move, because now it's gone straight up for the past week, and I kind of missed it. I wasn't following it. And now you say to yourself, well, that indicator I follow and that guy on TV says that this is a little bit too high. It's a little bit too expensive for you. Actually, we're talking about a $300 or $400 stock, but maybe you wanted to purchase the calls or some type of spread, and it's just a little bit too lofty for you. And that guy on TV is actually saying, well, this is overbought. So according to him and to the indicators you follow, maybe you should think about selling this, in fact, because perhaps it'll pull back to this area back down here. Maybe you can make a little money on the short side. After all, make back what you would have made if you were long, and then get long again before it goes back up, okay? So let's say you decide to sell, think you'll make a quick buck to the downside, and then this happens. Look familiar to anybody, okay? This is what usually happens. Traders usually miss the move, and then in trying to overtrade or make the money back, they'll do the opposite, and then they really get themselves in trouble. Well, in today's educational presentation, I'm actually going to share with you the entry rules to one of our most consistent methods for actually capturing these big trends. In fact, on the very day where you thought maybe you'd be selling, you wouldn't be selling at all. This strategy would have generated a buy signal. So you could potentially, if you had held on for the next week or so, could have potentially captured up to 115 points. Now, I know a lot of you may be saying, well, Steve, I don't really trade this way. I'm not a technician, or I don't really understand a lot of rules, a lot of base rule strategies, and I know it's kind of difficult for me. Well, that's why I specifically developed with Pro Trader Strategies the PTS Primo charting platform. This is the educational platform that actually teaches you how to trade so that you won't miss these big moves. So this promises to be a great educational presentation. Thanks again for joining us on this Thursday evening. As Steve said, my name is Steve as well. I'm Stephen Primo. I'm the president and founder of Specialist Trading. 10 or 12 years ago, I teamed up with Pro Trader Strategies with just one goal in mind, and that was simply to educate traders. You see, it's our opinion that the reason why most traders fail is because you're really not making your own decisions. You're letting someone or something else make your trading decisions for you. You're basically either maybe trading a system, or you're just basically living for whatever some guy says on TV and following what he says. But what really separates the consistent traders from the ones who are blown out in the first 6 months is that sound fundamental education. Now, I've been trading for 43 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. So that's where we get the name Specialist Trading. If you're not familiar with what a specialist is, it doesn't mean you're any more special than anyone else, but in the old days, I'm sure Steve can remember these days too, before everything went electronically, if you wanted to buy or sell a particular equity, what you had to do is you called up your broker, your stockbroker. He in turn would contact the floor broker on the floor of the exchange. The floor broker then would walk up to the trader who specialized in making a market, let's say IBM or USA or Waste Management. Those were 3 of the stocks I made markets in. And if you wanted to buy or sell, he had to make a market for you. He specialized in making a market, and that's how you purchased or sold stock. So I made markets. I was a specialist during the crash of '87 and the bull market that followed. So I've traded just about every environment you can think of: straight up markets, straight down markets, sideways markets. I've traded just about every system or methodology or strategy you can think of. So in my 43 years of experience, I know what works in terms of consistency and I know what doesn't. So this is what we do at Specialist Trading. We simply want to educate you with these things that have stood the test of time so that you can ultimately make your own trading decisions. And you'll see the attention to detail I give in trying to educate you today because, as I said, I'm going to actually give you the entry rules to this really consistent method. Now, before we begin, we are first required by law to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this particular method, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember that since we are an educational company, all examples are strictly for educational purposes only. As you're taking a brief moment to view the disclaimer, I would like to take this time to invite each of you and every one of you to follow us on Twitter. There's our handle right there. You may want to copy that down. Every day I post different educational information, anywhere from signals our strategies have generated to little bits of financial wisdom that I've accumulated along the way. So lots of great free educational information. Please feel free to follow us on Twitter. So as I stated in the opening statements, we are a little bit different. We're similar and aligned to what you do here at the Candlestick Forum, and that we're really trying to educate you. I know Steve is old school like myself, and that's what we really want to do. We don't really just want to trade for you. Our goal as educators is to teach you how to trade so that you can make your decisions yourself. That's the way I was taught when I first started trading some 43 years ago, and I struggled tremendously. My mentors taught me these things, and these are the same things I pass on to all my students around the world in over 115 countries and in every state in the United States. So hopefully we'll be able to bring some consistency to your trading with the method I'm about to share. Now, I know this is being recorded, so I'm going to share with you all the rules, the entry rules, I should say, to this method. So if you have a question, though, if I kind of go too quickly, please wait till the end to asking questions. I promise I'll get to them at the very end, because if we stop here at every slide, I think I was talking with Becky earlier today when we were uploading the slides, I have over 150 slides, and if we stop at every slide to ask a question, I'll keep you here way too long on Thursday evening. I don't want to take up all of your evening. So many times, if you wait for the next slide, your question will be answered. So if you have a question, once again, please wait till the very end. And also, if I happen to go too quickly, I'm going to give you some parameters that you may want to jot down. Don't worry, I believe this is being recorded, so you'll probably all get links to this recording. And if you're not able to copy it down right away, you can just watch at your own leisure once you get the link to the recording. Okay. All right. With that said, let's begin today's educational presentation. And what I'm going to be talking about today is strategy 3A. This is something I learned on the floor of the exchange from my mentors. And let me give you some of the highlights of this particular method. It's a continuation strategy. All right. So if you're not familiar with a continuation method, unlike a pullback method or trying to buy low and sell high, a continuation strategy likes to buy high and sell higher. Or if you're going short, it likes to sell low and then cover lower. All right. It does this by using a unique Bollinger Band setting. Now, usually this proprietary setting is reserved for the students who have purchased our course, but guess what? I'm going to share with you what this setting is today. All right. Now, by using this Bollinger Band setting, it's designed to trade these quick and powerful trends. So you can apply this. The beauty of strategy 3A, you can apply it to any market, any time frame, and any direction. I'm going to share with you a lot of slides today. The majority of them are on stocks, but I'll also show you some that have to do with futures and currency pairs. So it really doesn't matter what market or what time frame. We have students that use this on intraday currency pairs, on weekly bars of stocks, even on Bitcoin. So it makes no difference if you're trading commodities or futures. It can be applied to any market, any time frame. But with all of our strategies, we ask all of our students, even the ones that are full members of the course, to always, it's a requirement, you must paper trade first. You know, when I've done this presentation in the past, I'll get emails later on from students that say, hey, Steve, I traded this the very next day, and it lost me tons of money, so I think you sold me something or you gave me something that's faulty. This stuff doesn't work. And then I'll ask for some examples of what they traded, and almost inevitably, they're all incorrect. In other words, they didn't study the rules correctly. They jumped in too quickly. They didn't paper trade. And so this is why it's really important. You have to practice first. Think of any endeavor, any hobby, any career, be it an actor, an entertainer, anything, an athlete. They always have a practice environment first before they go into the real thing. It's the same way with trading. You have to paper trade first to fully understand the process before you jump in. And then lastly, our edge with all of our methods and strategies at specialist trading is consistency. Now, I know a lot of people think, wow, this is a consistent method, so that means almost all of the signals are winners, right? Not really. That's not what consistency means. Consistency is an awareness that you will have losses from time to time, and that's okay. I'm sure Steve has said, the traders have been trading for an extended amount of time know that losses are perfectly normal. What you want is a method that's able to recoup those losses. That's what a consistent method is. You see, you don't want a method that promises the world, and sure, it may hit a home run every once in a while, but then gives it all back. That's not a consistent method, and that's not something you want to be trading. What you want is a two-step forward, one-step back approach, and that's what a consistent method is, and strategy 3A is a very consistent method. In fact, I'll show you an example or two today where there was a loss, but how it quickly made it back. I believe sometimes on the very next setup. Okay, so let's talk about Bollinger Bands. Now, it's a very common indicator. I'm sure the majority of you are very familiar with what a Bollinger Band is, and just probably for the small few of you that aren't familiar, let me just go over the standard basics of what a Bollinger Band is. I'm not going to go into the inner workings of it because I personally don't understand it, but I'll just show you the basic setups that you'll most likely find on just about any software package, okay? Now, a Bollinger Band is 3 lines. Now, the center line is just a moving average. In fact, it's a 20-period simple moving average. Now, the band on top and the band below, the upper and the lower band, are separated by a deviation. That deviation is usually set at +2 for the upper band. In other words, it's deviated a distance of +2. The lower is the deviation of -2. All right? Once again, don't ask me to go into detail. That's just the way they're usually set up. That's the standard setting for Bollinger Bands. So when we look at a normal chart, standard settings, the Bollinger Bands look like this. We have the middle line, which is basically the band is a 20-period simple moving average. And then we have the upper band right here and the lower band. Okay, this is usually the way Bollinger Bands will look. And they're used for some nice volatility setups and some nice ways to identify certain environments. And that's fine. But we're going to change things a little bit for this particular strategy. All right, so here's what we're going to do. Remember, these settings are usually reserved for the students who purchase this course, but I'm going to share them with you today. What we're going to do is we're going to keep the moving average, the middle band, the same. It's going to stay at a 20-period simple moving average. The only thing we're changing are the upper and lower band deviation. So we're going to go down to fractions. Rather than being +2 and -2, we're going down from 2 down to +0.382 and -0.382. I know a lot of you may say, oh, so this is a Fibonacci number, so this must have something to do with Fibonacci support and resistance. It's something based on that. Not really, because this is the standard setting my mentors taught me some 4 decades ago. And trust me, I've experimented with tons of other settings that have nothing to do with Fibonacci. And for some reason, this works better than anything else. But feel free to experiment if you'd like. But this works the best than anything I've ever seen. On top of that, this is something that you can probably go adjust in the settings in your own, whatever software package you're using right now, whatever platform you're using. So all you have to do is go into your edit box, keep the moving average set at 20. The upper band and the lower band are simply going down to fractions at 0.382, okay? If you're having trouble with that on your particular platform, I'm sure you contact your tech support and they should be able to help you with that, okay? So let's see what that looks like. This is the standard setting. And looking at the same chart, now we're going to apply the proprietary setting. So you see the difference. You see it's a lot more smoother and it's a lot more, kind of flowing. Now I know a lot of you may say, well, Steve, can't I just use the moving average envelope or Keltner channels? Remember, I've experimented with those and you're just not going to get the same results once I teach you the entry rules, okay? This is really important to have it this way in order to get the same type of results, all right? Remember, once again, when we're talking about results, this is not a system. I know a lot of you may say, well, Steve, this is great. What's the win-loss ratio? What's the worst case drawdown? Remember, I'm just going to be sharing with you a basic format for trading this. There are literally dozens of ways to trade this, and our philosophy is no 2 traders should trade alike. You should figure out how you want to enter, and we share with you upwards of 6 or 7 different entry ways. I'm sharing with you just the most basic. There are 6 or 7 different exit points, and there are 6 or 7 different stop placements. So you add all these variables together, and there are like dozens, if not hundreds of ways to trade this. So we do not have statistics. In fact, we don't believe in them. Years ago, when I was asked to teach some systems and some strategies, trust me, these systems went back 20 years and they had phenomenal numbers. Win-loss ratios, win percentages. Going back 20 years, just the percentages were 80 to 90%. And then when 2008 hit, guess what? They all went out the window. All right, everything lost. What happened to all those great, numbers and all those statistics? When the market changes its environment, you have to be able to adjust and change. You see, a system will just stay the same at all times, and that's where most traders have trouble because the system isn't flexible enough to transfer and to shift with the environment. So what we want to do is give a strategy, which is basically about 60 to 70% rule-based, which I'll share some of the rules with you today, and it allots for about 30 to 40% discretion. And by discretion, we don't mean, well, I feel lucky today, I'll just bet the farm. No, discretion means a personal insight or an idea you've had, but you've seen a certain setup before, and so you think, you know what, this is a little bit more risky. I'll maybe use a tighter stop, or maybe I'll get out a lot quicker than I normally do. See, that's what discretion is, and we teach you all these different variables for you to decide. So once again, if you're looking for statistics and numbers, you're not going to find them at specialist trading. We don't believe in them. Okay, so let's look at the entry rules, and remember, once again, if I go through them quickly and you feel you didn't get them all, don't worry. I'm going to go through a number of slides and we'll go over them. And also, as I said earlier, I believe Candlestick Trading Forum records all these presentations. You'll be able to watch this at your own leisure and study the rules on at your own pace. Okay, now these are the buy entry rules. Remember, once again, if you've been trading for a while or if you have any kind of idea of what type of a trader you are, you can figure out where you'd like to exit. You can also figure out where you'd like to place your stop. You can use pivots. You can double the risk exposure to use your exit. There's lots of simple ways. But in our course, we teach all the different exits and all the different stops and different entries as well. Okay, step one. Obviously, you want to plot the proprietary Bollinger Band setting on your chart. You should be able to do this with whatever software package you're using. Simply edit it down to 0.382 for the band deviation. All right, so these are older charts just for educational purposes so that you fully understand. Here's an older chart of Amazon. As we can see here, it looks like the stock has taken off, right? And most traders at this point would say, wow, I missed this. I'm not going to get involved in this. This is way too high. And, it's probably going to come back down. But what we want to do is plot the Bollinger Band. Now, the beautiful thing about the PTS Primo charting platform is that everything is pre-formatted. On our platform, all you have to do is click on the strategy you're trading, in this case, in the green strategy tab, strategy 3A. Once you click that on, you see a drop-down menu. Just click on indicator. And it's already been pre-formatted with the settings. There's nothing you have to change. Excuse me. There's no edit box you have to go into or call up tech support. It's all right there for you in a matter of seconds. So now you see the proprietary settings on the Bollinger Band. That's step one. Step two, you want to look for 5 consecutive, all right, in a row, consecutive price bars that are closing either on or above that highest Bollinger Band, okay? And remember, this can be any price bar time frame. It could be a tick chart, it can be a 5-minute bar, it can be a weekly or a monthly bar. It makes absolutely no difference. All right, so as we look here, what do we have? We have a total of 1, 2, 3, 4, 5 consecutive bars close either on or above that highest Bollinger Band. Now you notice bar number 1 opened lower and it intersected within the realm of the Bollinger Band. That's okay. Remember, the rule states that it has to close there. It's okay if it's inside the Bollinger Band. All right, so now that we have that set up, we go to step number 3. Once we identify bar number 5, we're going to enter the buy when price trades 1 tick above bar number 5. Now you notice I didn't say when price closes. Now if you want to be more conservative, remember, once again, use your insight and your discretion. We have a lot of traders who say, you know, Steve, I don't like a lot of risk. I want to make sure that this is a good setup, so I'll wait for a close above that. All right, that's fine. Remember, we're flexible. It's up to you. As long as you keep the basic format in place, go ahead and adjust it however you see fit that fits your trading persona. But the basic format is all you need is for it to close, or I should say all you need is for it to trade above bar number 5. Remember, you can trade at any time frame, any direction. So what we're saying is that it just has to trade intra-bar above there. So as we see, there's bar number 5. So you can draw a little line there and make yourself a reminder, whatever time frame you're trading. And look what happened. As it traded there, that's where your entry would have been. You could have bought at the market. Let's say you could have purchased options let's say you could have purchased a spread. It's entirely up to you. Remember, we're not here to tell you how to trade. We're an educator. We're simply sharing with you high probability setups that have stood the test of time. If you want to buy it through options, that's your choice. You decide which strike price or which, if you want to buy a call or you want to buy a spread, that's your decision. If you want to actually purchase the stock, that's fine with you. If you want to buy at the market, that's fine. If you want to place a limit, that's fine. But the point is that we teach is that the trigger is once price trades, doesn't have to close, but trades above that bar number 5, okay? All right, so as we see, look what happened, all right? Now, some traders would say, well, wow, this is amazing, Steve, so where would I get out? Remember, that's in our course. I can't give you all the rules. That would be comparable to me owning a restaurant, and then you walk in and I give you some free appetizers, and you say, Steve, this is great. Can you have our meal for free as well? No, I wouldn't be fair to the people that have purchased the meal. That wouldn't be fair to all of our people that have also purchased the strategy course. So once again, we teach you all the different exit levels. We have upwards of 6 or 7 different exit points. It's up to you. Okay, remember, I see some people are asking questions. So I'll get to the questions at the very end because I have a ton of slides here, and I don't want to stop. It will take way too long. All right, so let's look at the sell rules. Okay, these are the sell rules according to strategy 3A, and they're basically the same thing. We're just turning them upside down. All right, step 1, plot the proprietary Bollinger Band setting on your chart, okay? This is simple. Once again, on our PTS Primo charting platform, all you have to do is click on strategy 3A in the drop-down menu, click on indicator, and there it is, already pre-formatted for you. All the settings are already in there. It's one click away, all right? Now, step number 2, we want 5 consecutive in a row price bars that close either on or below the lowest Bollinger Band. All right, so this is just the opposite. Remember, it doesn't have to, it doesn't matter if it's intersecting. It just has to close above the highest, or I should say, in this case, since we're going short, the lowest Bollinger Band. So what do we have here? We do the count. 1, 2, 3, 4, 5 closes below. Now at this point, you see, this is where people usually say, wow, okay, this is way down too low. And look what we have. There's a reversal. We opened lower on a gap down and closed higher. That's a reversal. So I want to go long, right? And that guy on TV said, you got to buy this stock, Roku. So, I'm thinking about going long. This is the way most traders make their decisions based off what some guy's telling them on TV and based off some indicator that they really don't have any idea what it's based off of. And then normally, that's why traders lose money. We have to learn how to listen to what the market is telling us. What is the market telling us? Well, since we have 5 bars closing below that lowest Bollinger Band, it's basically telling us that it wants to go lower. All right, but we need a little confirmation. So how do we do that? Well, we're not going to just sell at the market. We're going to sell when price trades. Once again, it doesn't have to close, but just has to trade 1 tick below bar number 5. And remember, it makes no difference what time frame. Makes no difference what direction. I said this, I think, 10, 15 minutes ago. You can trade this with anything, all right? So as we see here, bar number 5, that's where you want to go short. Buy the puts, some type of spread with a bias to the downside. Short the stock if you wanted to, if you have a good enough account. It's entirely up to you. That's your choice. Remember, our goal as educators is to educate you so that you can make your own choice. Remember, as I said earlier, the only way, in our opinion, that one becomes a consistent trader is by making their own trading decision. So look what happened. We had to wait a couple of bars. So as you can see here, 1, 2 bars until ultimately it traded there. Now, a lot of students say, well, Steve, how long do I wait? 5 bars, 20 bars? Well, here's the basic rule of thumb. If price doesn't go back up to close within this Bollinger Band setting, it's still okay to wait. Now remember, once again, it's up to you. If after 2 bars, even though it hasn't gone back up into the Bollinger Band, if you feel uncomfortable, then don't trade it. Remember, this is not a system where everyone has to trade according to the rules so you can get those statistics. We don't believe in statistics, so it's up to you. You are in charge of your own trading, okay? So in this case, if you would use the basic format, well, guess what? You would have entered right here and gone short, and then 45 points that potentially you could have taken advantage of. All right, now we're not saying you would have made 45 points, but you had 45 points to work with, okay? What if someone would have said, hey, listen, if you short right here, you'll have 45 points to work with, and you can get out wherever you want within that 45 points. Wouldn't you like that? That's a pretty nice little edge there, right? Some of our students would have taken a 5-point gain and gotten out, some 20 points. It's entirely up to you. You're in charge of your own trading destiny. Now, I know a lot of students say, well, Steve, what happens when the trend changes? Well, sure, it changes. But remember, the market tells you when it changes. As we see right here, it started to go back up. And then what do we have? Rather than try to short again the way so many other traders would, we get back in. This time, we go with the market. If the market's telling us now that it wants to go higher, guess what? We're not here to short the market and to fight it. We're here to go with it. So we just say, okay, if it wants to go, there's 5 bars above the highest Bollinger Band. There's where I'm going to enter. You could have entered, and even on a gap opening, if you had decided to go long, in 2 or 3 days, you could have potentially made 25 points. So you see how simple this is. This was all done without using a ton of indicators. This was all done without worrying about interest rates or earnings, earnings numbers coming out, without jobless claims, without some guy on TV telling you what he thinks. Once you learn how to listen to the market and then simply jump on board, that's when trading starts to become consistent. Trust me, I used to wait for earnings. As I've made markets in roughly 60 stocks, I had to know everything about those different companies, or so I thought in the beginning. I knew all about the inner workings of the company, the CEOs, the direction they wanted to take the company. I knew all the earnings estimate of 60 stocks. I was waiting with bated breath for the jobless claims. We used to watch the money flow index at that time. I'm sure Steve remembers that. There were so many things we used to watch, and guess what? I couldn't make a dime. So trust me, if those things didn't work 43 years ago, they're not about to miraculously start working. I'm sure Steve will tell you, the main thing you have to look at is price and what the market is telling you. See, our job is really simple as traders. It's just that we make it more complicated than it has to be. Our job is really simple. It's twofold. The first thing is we listen to the market to tell us what it wants to do. The second rule is we just jump on board in that direction. That's it. We don't have to try and pick tops and bottoms. We don't have to look at earnings reports or interest rate. We just listen to the market, and that's when your trading starts to become consistent. All right, so let's look at some more examples. Some of these examples are a month or so old. Some happened within the last week or so. And remember, most of them are with stocks. I'll show you some currency pairs and some futures towards the end there as well. Okay, here's an example in, what is this? NTRA, it's hard for me to see here, yeah. All right, so what do we have? Price is originally below the bottom Bollinger Band, and then we start to go above. So we do the count. 1, 2, 3, 4, 5 closes above. We want to enter 1 tick above bar number 5. If you don't know what a tick is, it's just a unit of measurement. So let's say the high of that bar is 50, just for a round number sake. All right, 1 tick would be 1 cent higher, 50.01. The next tick would be 50.02, and so on. That's what a tick is. So once we trade 1 tick above, that's your trigger to enter. It's up to you how you decide. Now, we had to wait 3 or 4 bars. At this point, it's entirely up to you whether you want to wait or not. But remember, the trade is not negated until one of these bars closes within this Bollinger Band setting here. And we see here that we went within it, but we didn't close below it. So it's still, for all intents and purposes, a valid setup. Guess what? We would have entered right here and potentially captured 12 points in the next week or so, okay? All right, here's another example in LITE. Now, here's what we mean by being consistent. Now, let's say you had used this 1, 2, 3, 4, 5 setup. You had entered right here, but look what happened right after that. It didn't really go up very well. Now, if you used one of our wide stops, usually below bar number 1, you'd still be in the trade and could have potentially captured 11 points within the next couple of weeks. But let's say you used one of our minor stops here and just placed it right here, you most likely would have been stopped out. That would have been a losing trade. All right, this is where most students say, hey, Steve, this stuff doesn't work. I'm going to throw my computer out the window. This is a loss. My very first trade, I lost here. I lost 4 points. All right. What do we mean by consistency? Consistency is an awareness that you will have losses from time to time. You just have to, stay diligent, because many times the very next setup can recoup that loss. For example, we see here that the trend changed, and now what do we have? Now we are below the lowest Bollinger Band. So if we count the number of bars, we have a total of 5 bars closing below. So that's a valid sell setup. We want to go short 1 tick below bar number 5. Had you entered there, guess what? Potentially you could have captured 14 points. So you could have potentially made back that 4-point loss and then some. This is what we mean by consistency. So don't just, like so many other traders do, go sulk in the corner and so go play that victim game that a lot of traders love to play. Like, I never make money. I'm always losing. How come this doesn't work for me? It's usually because you just want to blame someone else. But once you make your own trading decisions, you take responsibility for everything. And that's good, because then you'll start to take things more seriously than rely on what someone or something else is telling you. All right, here's an example in Apple. Here's an older chart of Apple in August coming into September. 5 bars closing above, that's where we're going to enter, where that little green horizontal line is. You would have entered on the next bar and potentially captured 23 points you could have captured coming into September. To the downside, we're looking at DAO, 5 bars below the lowest Bollinger Band. There's bar number 5. There's the red horizontal bar. You would have entered on the next bar. 14 potential points in a couple of weeks coming into the middle of last month. TGT, all right? We originally have some bars closing above, 1, 2, 3, 4, 5. The 5th bar closed below, so we have to start over with our count, all right? Here's our count again, 1, 2, 3, 4, 5. Okay, so now this is the valid setup right there. We entered 31 potential points coming into the middle of August, a couple of months ago, okay? Do you see how the market tells you what it wants to do before these big moves usually happen? Not guaranteed, but that's all we're looking at. We're not in any way requiring you to look at earnings or volume or things of that. We're just looking at price action. Here's an example now in ALNY. All right, we were above. Now we had one close below. This is where students usually make mistakes. They said, Steve, I had one close below, so I sold at the market. That's not the rule. You need 5 closes below. Now look what happened on the very next bar. We closed back above. We have to recount. We finally get 5 closes below. That's our entry right there. And potentially we could have captured 25 points to the downside. If we held on that long, it's up to you, coming into mid-September once again. Okay, let's look at W day. Now, as we can see here, we had 1, 2, 3, 4, and then the 5th bar closed within the realm of the Bollinger Band. So when we have no way to go short. Now we wait for the next count, 1, 2, 3, 4, 5 bars. So here's where we want to enter. It has to trade above bar number 5. And we entered because it traded above. Remember, this is where students have trouble. They say, well, Steve, it didn't close there. So remember, it does not have to close. Or else they'll say, Steve, I bought it and it closed towards the low at the end of the day. I have a loss. So, yeah, that's okay. You're not stopped out. That's fine. If you had exited thinking that you got scared and you didn't want to hold on to a loss, you would have missed a nice 55-point gain in the next 4 or 5 days. Now, obviously, some news caused this stock to gap up like that. I stopped looking at news 43 years ago, so I have no idea. I never look at news. I don't know what Steve does, but I stopped looking at news. I just look at price action. So a lot of my students say, well, Steve, how did you know that was going to go up 55 points? I didn't. I just knew that the market was telling me it wanted to go higher. So I just jumped on board. Now remember, I probably, if I traded this, would have taken a nice 10-point gain and said, thank you very much. I'm not sure if I would have stayed in, but we have some students that stayed in for the long haul and would have made over 50 points. Here's an example now, looking at BMRN. Now, these are all daily time frames of charts. We have 1, 2, 3, 4, 5 closes below. Doesn't look like anything's really happening here. Most students would say, well, Steve, I can't go short. We've been closing low every day. We're so oversold. Why would you want to sell more? Well, because the market's telling us it wants to go lower. Even though you sold here, it closed up on the day. Look what happened. Took a couple of weeks, but ultimately it kicked in down 50 points. Once again, how did we know? We didn't know. The market was telling us it wanted to go lower, so until we got stopped out, we just held on to the position. All right. As we look at this example here in Lulu, this was coming into August, coming into September. Once again, 5 closes above. If you had held on and used one of our wider stops, even though for the first couple of weeks nothing happened, you still would have been in the trade. And ultimately, it would have kicked in and potentially you could have captured upwards of 70 points. All right, here's an example how you can switch gears if you want to. Here was an entry now in CACC. Had you entered there on the 5th bar, potentially you could have captured 100 points. I know it's a lot. It's an expensive stock, but this would have been a good stock to purchase the calls on. And then once we changed direction, This is where most students say, well, I'm going to buy some more because most likely it's going to go higher. Those earnings are supposed to come out, and that guy I go to in the trading room tells me I got to buy this. And so every decision I make is based off of what someone or something else is telling me. Remember, our goal as an educator is to let you make your own decision. And we make our decisions based off what the market, the source is telling us. And what's it telling us? It's saying that there's 5 closes below. So there's our entry right there to go short, not to go long. And you taken that, well, potentially you could have captured 175 points coming into the end of last month. That's potentially 275 points. Now, I know a lot of students are saying, oh yeah, sure, Steve, 275 points, but that would have meant I would have had to get in at the very bottom and get out at the very top for both that buy and that sell. Well, sure, I'm just saying potentially. Now, let's say you only captured half of that, okay? Well, guess what? That's over 135 points. You think you'd be happy with 135 points? Okay. Let's say you only captured half of that. That's still close to 70 points. Okay. So you don't have to pick the top and the bottom. There's still a lot of that big move to capture. Let's look at an example here. This was in Tesla. All right. This was the one we started off with looking at the beginning of the presentation. Remember, most students will say, well, Steve, that indicator I purchased it's telling me this is overbought. I can't buy this. I think I want to short it. But remember, the strategy entry rules I'm teaching you today say there's 5 closes above. All right. So 5 closes above, the market's telling you it wants to go higher, but we have to confirm it by only buying if it trades above. So here's how you check your work, because remember, we can't be with you sitting next to you 24/7 while you're trading. So we developed the PTS Primo charting platform almost as your personal mentor to check your work. So let's say you've learned all the rules to this strategy. You have a good idea that this is a setup. So you want to check your work. Click on strategy 3A. This time you want to click on the signal arrows, and an arrow will be placed where a valid setup is. And this is how you check your work. As you can see there, there's a valid up arrow telling you that's a valid signal. Remember, our job as an educator is to teach you how to identify these setups on your own. Then it's up to you to decide how you want to enter. Some of our students place market orders. Some of our students wait for a limit to be purchased at a lower level. Other of our students place a limit at a higher level. It's completely up to you as long as you keep the basic format in play. So had you purchased, once again, the basic format once it traded here, well, you would have waited 1 day, but the next day you would have entered and potentially captured 115 points, okay? This is why we say we don't use statistics, because we want you to trade differently from someone else. In fact, it's our belief that most traders fail because you're copying someone or something else. I know that when I first started trading and learning all the different methods my mentors taught me on the floor of the Pacific Stock Exchange, I remember I said the same thing. I said, hey, listen, why can't I just copy you guys and piggyback of whatever you're buying? Since it's a good strategy, why can't I just do what you're doing? You tell me when you're buying these things and I'll jump on board. And they said, because we would be doing you a disservice, because most likely we don't trade like you. Maybe our risk is less than you. Maybe our risk is higher than you. What if we like to trade 100 times a day? What if we only like to trade once a day? Let's say you're the opposite than us. If we only wanted to trade once a day, but you like to trade 20 or 30, you're not going to like this. And you're going to overtrade looking for setups, and you're most likely going to lose. What if you have a very large risk parameter and we have a very small one? Well, you may get stopped out with a lot of small losses. You wouldn't like that. You probably throw this away saying it doesn't work. That's where they taught me the great truth is that no two traders should trade alike. You have to do some soul searching and see what type of a trader you are. Do you like a lot of risk? Do you like to hold positions overnight? Do you want to intraday trade? Do you like to purchase options? See, everyone trades differently, and that's fine. There's no one right or wrong way to trade. In our opinion, the only wrong way is when you blindly follow someone else without understanding why you're doing it. This, in our opinion, is why most traders fail. That's why we don't believe in statistics. Everyone should trade according to their own means. We have thousands of students around the world, like I said, in over 115 countries and in every state. We can't keep statistics for each and every one of our students. That would be silly. We're not a statistical company. We're an educational company. All right, here's an example in QDEL. 5 bars below. All right, 1, 2, 3, 4, 5. We check our work. We say, okay, we kind of think we know the rules. We've learned all the stops and all the exits in the course, but we want to check to make sure this is a valid setup. Click on signal arrows. Yes, we're properly learning how to identify these on our own. See, we give you the arrows as an educational tool so that ultimately you can decide for yourself how you want to trade and you don't have to rely on them anymore. I know where there's a setup without using the arrows because I've been trading this long enough. And you want to go short, one tick below. That's where you enter on the next bar. Nothing much happened for the next week. Now, this is where students start to worry. They say, hey, Steve, this is not working. I say, well, you're not stopped out, right? No. Well, hold on if you want to. If you want to get out, you can, but there's no reason to. 108 points in the next couple of weeks, okay? Once again, we had no idea it was going to go down that much. It's entirely up to you how long you want to stay in. We have so many different exit methods for you to stay in. It's up to you to pick the one that feels comfortable for you. All right, here's an example in LAD. If you want to stay in longer, if you're the type of trader who wants to squeeze as much bang for your buck, well, you can stay in as long as possible, and we have traders who like to stay in like this and potentially capture as much as possible. We have a particular method I know of that would have still kept you in this trade. Now, we also have methods for exiting in the course for traders who like to get in and out quickly. So as you see here, there was an original 5-bar count to go short, okay? But we never traded below bar number 5. So we switch with the market. And here we go, 5 bars above now. So now we're switching with the market. The market's telling us, hey, guess what? I changed my mind. Now I want to go higher. So we purchased 1 tick above. And we got long a couple of days later in Zoom. And if we're the type of trader that wants to get in and out quickly, well, in about 4 or 5 days, there's a nice quick, I believe, 100, 200 points. If you want to stay in a little bit longer, 235 points. Once again, can't say this enough. Trading is really simple. It's the trader who makes it more difficult than it has to be. All right, so let's look at some Forex, E-mini, S&P charts, and some commodities as well. Here's an example in a 4-hour chart of the British pound. The same rules apply. Nothing changes because we're now looking at a different market, a different time frame. You would have entered here in the British pound, New Zealand dollar, and as you can see, a quick 315 pips. That's over $3,000. Now, once the market changed direction, well, it gave us a signal to go short. We want to go short right here. Now 390 pips. Not a bad little setup, right? That could have been upwards of $4,000 per unit, all right? Close to 700 pips you could have potentially captured. Let's say you only captured a third of that, okay? 225 pips. That's not a bad little trade for a month or so work. How about a 10-minute chart of the E-mini futures? This was just last month, okay? We originally had some bars below the lowest Bollinger Band, 1, 2, 3, 4, 5. So here's where we would have entered. But remember, we have to trade below them. So we never traded below there, so there was no trade. But what happened? The market changed. Now we have 5 closes above. So we enter 1 tick above on the 10-minute chart. 52 points, okay? That's over $2,500 per contract in a couple of hours. Lastly, we're looking at crude oil. Here's a weekly chart of crude oil. This is the third different market, a different time frame. We've already showed you intraday. We've showed you daily bars, weekly bars, 4-hour charts. Here's a weekly bar of crude oil going all the way back to February, March. 5 closes below, 1, 2, 3, 4, 5. There's bar number 5. You would have entered 45 points in crude oil on a weekly chart coming into April and May, okay? Now, remember, there was no need to look at any economic indicators or anything that was going on economically with crude oil. Why? Because the market told you, price told you what it wanted to do. All right? All right. Let's recap before we go into the question and answer portion. Remember, this is a continuation strategy. A continuation strategy looks for an already established trend, usually to the upside, strong upward move or a strong downward move. We wait for a little pause, and then we look to re-enter. Okay, so we're buying at the high level and usually selling higher if it works out okay. Remember, we showed you some trades that were losers as well, so we're not cherry picking. We also showed you losses as well. Now, the way we do this is through a unique Bollinger Band setting, and we shared with you the settings for that. It's designed to trade quick, powerful trends, as we showed you. Remember, in any market, in any time frame, and in any direction. Now, I know a lot of you, your eyes are lighting up saying, boy, I'm going to start trading this tomorrow morning. Please. It's okay to trade it tomorrow morning, but paper trade it, because I can almost guarantee that you will lose money if you jump in too quickly. Most likely you won't do the count perfectly. You'll use the settings. You'll say, wow, my platform doesn't allow me to use those settings. I'll just use a moving average envelope, or I just use a Keltner channels. That'll work just as fine. No, they won't. You won't get the same type of results, okay? And then lastly, our edge here is consistency. Remember, consistency is an awareness of losses from time to time. I shared with you a couple of losses. This will lose every once in a while. But a consistent method is one that's able to recoup. So there's two charts, examples I shared with you. They recouped on the very next setup. So this was in no way cherry picking the best trade. You will be able to see for yourself. Sometimes you'll have losses, and through your paper trading, you'll see how able you are to make it back. Now, before you ask me questions, I want to ask you one, and please answer honestly. Do you think this strategy could have helped your trading this past year? Now, we're almost at the end of 2020. I can almost guarantee you that most likely your trading isn't where you wanted it to be when you made the promises and the goals set aside for yourself in January, right? That's okay. Everyone does that. That's okay. Our job as an educator, Steve and I, is to take your trading to the next level. We don't in any way want to sell you. We don't want to, force you to do things. We just want to make sure you're a better trader because there's enough for everyone to go around. I know a lot of traders say it's a zero-sum game. For every winner there's a loser. But to me, that's a negative mindset. That's like saying, well, for every amount of breath I take in, there's someone that's exhaling a breath, okay? I mean, there's enough oxygen for everyone. It's the same way with profits. There are, enough profits for everyone to make on a daily basis. So there's no way you have to feel you're competing against anyone. We simply, as educators, want to educate you so that you can make your own trading decisions. All right, so let me tell you about a great offer we have for all the people attending today and taking time out of their Thursday evening. We're going to give you Strategy 3A course for a great discount. Now you see here, it says E-mini. Don't be fooled by that, because when we first started teaching this course some years ago, I taught it the way I was taught myself, using the E-minis, all right? And we thought it was just an E-mini course. But after we started teaching this, years and years, students would tell us, say, Steve, this worked great on stock, or it works great on Bitcoin, or it works great on currency pairs. So don't get fooled by this. You can apply this to any market, any time frame, any direction. As I just showed you, tons of examples in all markets. This is our premier continuation method. You're going to get that unique Bollinger Band setting, and you're going to get all the education you need, the complete Strategy 3A course rules. But we're not going to stop there. In fact, we're going to throw in a completely different strategy based off completely different requirements. This is strategy number 1. It's a completely different method because it's a pullback method. Now, a pullback method is one that looks to buy lower in an overall uptrend and then sell higher. And conversely, in an overall downtrend, it looks to sell higher and then buy lower. It's entirely different. The rules are entirely different from Strategy 3A. All right? Let me share with you an older example of how it works. As this older example in the spiders, the ETF that represents the S&P 500, most traders would look at this and say, well, Steve, this is a downtrend. We're going lower, so I want to short this, right? I want to get out of it. I don't want to buy. I just want to short. So what they would say is, Steve, you're always saying about, I want to be in a downtrend, so I don't want to do anything. I don't want to do anything here. I want to stay out. But with Strategy 1, what we want to do is use it as a pullback. The overall trend is down, so what we want to do is buy. And so what we did is Strategy number 1 generated a buy signal and potentially could have captured upwards of 8 points. Now, if you wanted to use this as a market direction tool, that's upwards of 700 Dow Jones points. So it's a completely different format, completely different requirements, completely different indicators. We're going to throw that in as well. But on top of that, what we're going to do is we're going to give you some extra bonuses. For example, 7 candlestick form bonuses. Bonus number 1, we're going to give you the add-ons for most of the major platforms like TradeStation, Metastock, MT4, Sierra Charts, NinjaTrader. So you can have the up and down arrows for Strategy 3A and Strategy 1, so you can learn how to properly identify them. We're also going to throw in an extra bonus. That's our Secrets of a Stock Specialist seminar. That's a 3-hour video course where I was asked to speak in Colorado some years ago, and I went over a lot of different trading edges. That's a nearly $1,000 value. We're going to throw that in. You're also going to get a PDF version of my book. Now, this book goes into detail on how I traded during the crash of 1987. It's a great detailed account of what I went through on the floor. We're going to throw that in as well. Bonus number 4, 6 months of the platforms. You can automatically have everything pre-formatted there for you. Bonus number 5, we're going to take our secrets course up a notch and give you more advanced edges and techniques in Secrets 2.0 course. Bonus number 6, you're going to get the scanners for our strategies, the individual scanners. And bonus number 7, you'll get the multi-scanners. You can scan for multiple methods at once, okay? Now, here's what I think is worth its weight in gold. Bonus number 4. Because with the platform, you're going to get also a ton of different information that I didn't talk about that really we haven't gone into detail. 43 years of trading techniques and experience all one click away. For example, you're going to get strategies 3A, strategy 1. You're going to get our Strength of Trend tool. This is a tool I developed with Pro Trader Strategies that has an uncanny ability to see when a trend is running out of steam or if it still has momentum left in it. In fact, if you go to our Twitter page, you'll see a number of examples how I use this. You also get our signal scanners. You can scan for setups on a nightly basis, okay, for the best strategy 3A or the best strategy 1 setups for the next day. You'll get our enhanced buy sell line. This is a great tool for determining the overall trend. Our top bottom 25% tool. This is a pattern recognition that determines the short-term trend. Auto-generated exits. Now in the courses, you get upwards of 7 different exit points. This is just one of the methods that's automatically generated with one click on the platforms. You can see where the exits are. And lastly, this comes with personalized tech support. This is a great way to really, if you have any difficulty, with loading a platform or loading up a chart or finding out what an indicator is, personalized tech support will be there in a matter of minutes to resolve any issues you may have. Remember, this is the educational platform. I designed this with Pro Trader Strategies with one goal in mind. And that was simply to teach you how to trade and to make trading simple for you. All right, so let's break this down. You're going to get strategy 3A. You're going to get strategy number 1, completely different method. You're going to get 6 months of the platform. You're also going to get those 7 different bonuses as well included, the PDF book of my detailed account on the floor of the stock exchange during the crash. Now, normally, if you purchased all of this separately, it costs you over $7,200, okay? Don't worry, we're not going to charge you anywhere close to that. We're going to discount that down to $297, less than $300, but this is for a limited time only. So trust me, you're going to be getting a ton of information, less than $300, okay? I can almost guarantee that many of you may have lost more than $300 this past week trading. You're going to get over 4 decades of information, strategies, and techniques. And one thing I didn't mention, you're also going to get my private email address so I can correspond with you personally or through email. So if there's any questions about trading, you'll be able to contact me as well. So this is a great offer. I always say this to students who take this offer. A year from today, you will have wished you became a member of all of these courses. Remember, upwards of 4 decades of information for less than $300, along with 6 months of our platform. So here's how to take advantage of this. Contact Pro Trader Strategies. They're my sister site. They help develop the platform. They're in charge of all the discounts and the pricing. You can call them directly at area code 310-598-6677. There's the link right there. You see, I believe Becky has posted that on the chat box. So you can simply click that on. It's a live link. And I'll leave this information up here. I know we have just a few more minutes left. But remember, I just want to say, I don't have access to live charts right now. This was a static PowerPoint presentation, but you have access, and now you learned how to spot this. You should know what makes a valid entry point and what makes a valid exit in terms of going short. So you can check out your stock. I see a lot of people asking for me to check out the stocks. Here's one person is asking, what are the Bollinger Band settings again? Remember, you can see this on the recording, but the Bollinger Band settings are simply 0.382 for the deviation. So what you want to do is you want to leave the middle 20 period simple moving average the same. All you want to do is change the upper and the lower band deviation. That's 0.382, okay? Now, remember, if you don't have that on your platform, you should be able to contact tech support. But if you take advantage of this great less than $300 offer, you would be able to just with one-click access have it right there on your chart. So this is a great offer. Once again, everything is pre-formatted. There's nothing you have to do. We made it really simple for you, okay? Let me check through some of these questions. Someone's asking, where do you place your stop? Well, remember, I said that at the beginning. That's as if I gave you a free meal at a restaurant. Remember, I can't give away all that information that's in the course, but for $300 or less than $300, you're going to get upwards of 7 different exit points, 7 different stop placements, and upwards of 6 or 7 different entry points. So you can decide for yourself. Remember, our goal as an educator is to teach you. And the way we do that is by providing you all these different variables so that you feel comfortable. You will never be a consistent trader until you feel comfortable making your own trading decisions. Therefore, we have stop placement for people who like a lot of risk. They don't mind. They have a large account. They don't mind taking a large stop placement. We have other traders who say, no, I like to sleep at night. I don't like taking a big risk. I like a minimal risk. Okay, fine. We have moderate risk. We also have exit points for traders who want to get in and out quickly. They say, Steve, I like to trade 20 or 30 times a day. I don't mind if I'm in and out in one day or so. I want to get in and out and go on to the next one. Fine, we have exit levels for that. We have other traders who say, no, Steve, I'm more of a swing trader. I'm in it for more of a long haul. How do I stay in longer? What are the exit methods for that? We teach you those. You see how we want to work with you so that you can decide how to trade. Remember, every trader should decide for themselves. No two traders should trade alike. That's our credo. That's our philosophy of specialist trading. Let's see. Do you have this for Thinkorswim? Yes, we do. There are a slight few edits and alterations you need to make for Thinkorswim because of the way they're set up. But yes, if you do have a Thinkorswim platform, you can apply this. I would contact Pro Trader Strategies though, because they're in charge of all the tech support, and they would be better answering than I. Okay. But most of the major platforms like TradeStation, Metastock, MT4, Sierra Charts, you can apply the up and down arrows. But remember, the beauty of our platform, once again, is you get all these extra features. You're going to get, for 6 months, the scanner. You won't get that if you have, let's say, TradeStation or let's say Metastock. You'll have to figure out how to scan for them on your own. But it's already pre-formatted, and our scans, that's one of the best things about our platform. Our scans take less than a couple of minutes to scan for tons of information. We provide you with all the data for foreign exchanges, for Asian markets, for Canadian markets, for Bitcoin, for intraday currency pairs, for futures trading, for stocks, the S&P, NASDAQ. So we have tons of data for you to choose from, whatever market you want to trade. Okay. Someone asking once again, they missed the Bollinger Band. Said yes, the standard deviations are 0.382. Okay. Thank you. I think Misha just printed it there for you. Thank you very much for doing it. Remember, this is all being recorded, so you'll all see it on the recording. You can watch it at your own leisure. Okay, last question, I guess. It says, how do you find stocks to trade using this method when the market is trending sideways? Well, the beauty of this is when the market's trending sideways, a setup won't be generated. We all know that when the market is trending sideways, that's really a kind of a whipsaw market, right? That's where you lose the most money. When the market goes up and back, it's kind of a whipsaw market, a range market. You buy and then it goes down, you sell and it goes back up, right? Well, the beauty of this method is that you won't get those 5 closes above the Bollinger Band or the 5 closes below in a range market. So it will keep you out of trouble. And some of the best trades are the ones you never take. So this is another great advantage of this method, is that it will keep you many times, not guaranteed, but many times keep you out of that chop, okay? Does this work with higher beta or volatility stocks better? Well, that's that's up to you to decide. Remember, we have no statistics sharing this. Our students trade it with anything. It's up to you. I would say just check it out. Remember, paper trade. Do the due diligence. Do the research on your own. We want you to do this. And a lot of my students get mad at me. They say, well, Steve, I want you to tell me what to do. That goes against our philosophy. We don't ever tell you what to do. We want you to do the research and to see if it fits your nature or not. We've all been trained for someone to tell us, Steve, what do I buy? What do I sell? Tell me what to do. Well, that goes against everything. That would be similar to an airline pilot asking the passengers, how do you think I should land this? How do you think I should fly this plane? The traders do this all the time. They're always asking people, how do you think I should do this? Where should I exit? What stock should I trade? That's up to you to decide, okay? So as we close here, I just want to thank you so much, okay? This is a great offer, less than $300. I don't think you can really take advantage of a better deal. Some 43 years of experience all tied up into less than $300. I hope you learned a little bit something tonight. If you're going to trade with this, please paper trade it first. And if you're interested in becoming a student of mine, contact Pro Trader Strategies because that $300 special will be over very soon, okay? I just want to say thank you so much for attending, taking time out of your Thursday. Thanks to Steve for inviting me. Thanks for Becky for helping me set up the PowerPoint presentation today. And just say thank you so much for attending, okay? I'll see you all next time. Bye-bye.
Steve, thank you very much. Good information. Everybody, take a look at it. Give yourself another strategy that you can apply to your mental trading arsenal, you'll find that Steve's information is very, very good, high probability, uh, logical information. So with that, Steve, thank you very much. Everybody, thank you for showing up. We'll see you in the chat room.